Hello everyone, and welcome to FinWiser Advisory. In this course, we will be talking about financial modeling, DCF and comparable valuation. This course is divided into 16 modules. We are building a financial model on Tesla Motors. In Module 12, we will cover financial statement integration. In this module, we will understand 3 financial statements. They are income statement, balance sheet, and cash flow statement. Steps in financial statement integration. Double entry system. We will be using Microsoft Excel. In this template, there are 4 sheets named as Balance Sheet 1 through Balance Sheet 4, which, step by step, run the user on how to integrate financial statements. Historical income statement, balance sheet, and cash flow created in the previous modules are available in this as well. Once the user completes a module, the final outcome of that is available to be used in the next module. Now, let's get started. The corresponding image helps user to understand the interlinkage between the 3 financial statements. For instance, when we talk about PPE account, refer to yellow lines for movement D and A, amount from income statement flow to the cash flow statement, and then the same D and A and capital expenditure amount from cash flow statement is adjusted to the opening balance of PPE to calculate closing PPE balance. We have already forecasted and linked all the income statement line items in previous modules, and the only line item left to be forecasted is Other Income, Expense, Net, row 26. There are such no drivers for such cost items, and these can be forecasted either as a percentage of revenue or absolute assumptions. We have assumed Other Income, Expense, Net, row 26, in forecast period to remain at 2013 actual level. Net loss per common share, row 32, can be calculated using the following equation. Net loss, row 29, by weighted average shares, row 33. Please refer to cell G32, which has been done as an example to calculate net loss per common share. Weighted average share, row 33, in the forecast period can be sourced from Control Account sheet under the Equity and Reserve section. Steps to match balance sheet. Step 1. Make all the line items in the first forecast period, that is, 2014E, equal to the last actual period, that is, 2013A. Step 2. Link cash and cash equivalents, row 8, to the closing balance of cash calculated in Statement of Cash Flows. This has been done to capture the cash impact of any transaction onto the balance sheet. Step 3. Now, we will be linking the property, plant and equipment, net items, row 16, in the balance sheet to demonstrate double entry system. Remember, we have created property, plant and equipment, net, in the CAPEX module, module 7, of this training material. Now, link the closing balance of property, plant and equipment, net, from the Control Account sheet in the balance sheet. This will give you a balance sheet error, row 45, because we have not created a corresponding entry in the cash flow statement. Please note that property, plant and equipment, net opening balance for 2014E period was $738 million, cell F16, which became $1,370 million, cell G16, at the end of 2014E. Now, we need to capture the reason for this change in balance sheet values over a period via accounting for the cash movement. For step 4, refer to Statement of Cash Flow sheet. Step 4. There are 2 reasons for that change. 1. Capital expenditure incurred during the period. 2. Depreciation charged for the period. Depreciation is a non-cash expense, and the same needs to be added back in the Cash from Operations section, row 9. Capital expenditure is the cash spent on creating new assets and is shown under the Cash from Investing activity, row 31. Once done, you will notice the balance sheet will tally again. Refer to row 45 on Balance Sheet tab. Please note that we have added the links in column L, which shows the cells to be linked in 2014 E. Once done, you can carry forward these links from 2015 to 2018 period. At any time, you can use these links to complete the financial statement integration. Line items which are forecasted on the Control Accounts sheet would be linked in Balance Sheet, rest all would be assumed as equal to previous year, in the forecast period. For instance, we have not forecasted the restricted cash, row 10, and for 2014 E, this will be assumed equal to the 2013 E values and so forth. Please note that we have added the links in column L, which shows the cells to be linked in 2014 E. Once done, you can carry forward these links from 2015 to 2018 period. At any time, you can use these links to complete the financial statement integration. That's all for now. See you in the next module. Have a wonderful day.